and a crackhead, but she can fucking cook. If you give her some ingredients, she can slap that shit together like it's nothing.
Nice.
Give my dad some ingredients, same shit.
Good information. Thank you.
Great information, actually. Speaking of.
I'm live, by the way.
Hey, live.
Alright. Sorry, I don't want to cut you out, but the live stream has started. Love you, darling. Hey.
What?
Love you.
Hey, love
Enjoy.
you too.
Okay. Thank you. Hello, ladies and gentlemen. Getting a missus is a full-time job. Getting a missus is a full-time job. Alright, let's get into this. So we are doing the thoughts on the Bitcoin, what's happening, what's going on. I'm with the bro Joseph, and we're gonna don't mind this, we're gonna get some things on the road. So I'm gonna open up TradingView because this is what is important. So on the screen, basically, this is the Bitcoin. And this right here, Trump said something. This is the daily time frame, so each candlestick is a day. Trump said something here and it started coming down. And we also had the government shutdown and all that shit. So, I have a strategy that's based off not that much technical analysis, but it's more based off fundamental analysis. So the strategy is based off of people that actually move the market. Because, same as in my trading strategy, I'm trying to chase the momentum, right? So I'm not trying to do what the people on TikTok are telling me to do. I'm not trying to do what the people fucking selling the course and telling them what to do, because it doesn't make sense. If the majority of people are thinking that way, then it's going to do the opposite. You know what I mean? So if people think it's going to go down, like I was explaining before, it'll go into extreme fear. That's when they think the market's going to go down, the market's going to crash, all the fear starts coming in. Because you have to understand, the market is based off emotions. All of this is emotions. Because it's you know, the humans have fucking made it. That's why it's based off emotions. Because we're emotional creatures, right? So, if it's in extreme fear, that means we think, or the people that move the market are eventually going to start taking it up. Because that's the opposite of what the majority of people, you know what I mean? So, if it's in extreme greed, and most of the people think it's going to go up, the market's going to start crashing. Now, I want to show you something. So, over here, it started crashing in October. So, let me pull this up. A? The major V something. I don't know. You'll see it. A? I don't know. Let's hold down the gold button. Where is it? Cool. What's that? Okay. So right here, right here, we actually in October, what's that? It's October, about to be November. We went up to a neutral stage in the fear and greed index. So you can see in March, it came down and it hit the extreme fear, and it goes back up. This is really good if you want to do like a really long term on the S&P 500, because at the end of the day, the S&P 500 is always going to go up. You can literally just buy every time it comes to the extreme fear zone, and you'll make money like that way if you don't want to fucking like spend time learning it. That's the most easiest way. But we want to do something more than that, because we don't want to make that slow of money, because that's like decades and decades and decades. So we come down in the extreme fear. So this is confluence number 1. I'm even gonna fucking write it down, but I'm gonna try to explain to you what's the meaning to the confluences, because you can't understand a strategy if you don't know what the confluence even mean. All right, so that's what I'm gonna try to understand, make you understand first. So I'm gonna do first confluence. Oh shit. I don't like the blue. Give me that. That's confluence. Nice. Oh shit. Grade index. There we go. So basically, the simple way to explain it It's just if it's in extreme fear, it's gonna go up. If it's in extreme greed, it's gonna go down. Because when it's in extreme greed, the market is at up, right? Because it's going up, so people are happy. People are happy when they see green. They're not happy when they see red, right? So everyone's getting greedy. Everyone's buying in. If people are buying here and then it goes down, they're fucking losing money. But isn't it funny how when it's at the lowest point, when people aren't trying to invest in it, it goes back up? You know what I mean? That's the whole understanding. So you have to wait until it's an extreme fear. You have to do the opposite of what majority of people are trying to tell you. Let me go to Arkham. So Arkham is like you can see the black coin, the Black Rock, buying and selling Bitcoin. So on the right side of the screen, each column is like one section. Over here, they sold $30 million of Bitcoin. And then they bought $30 million of Bitcoin. Then they sold it and then they bought it. So sometimes they do lots of in and out. But recently, after selling Bitcoin, like millions of Bitcoin for the last month, they're starting to buy it a little bit more than selling it. So they're kind of flipping it. They're doing it a little bit opposite. So if I keep going down. See here, it's a bit more green than red. Same as those greens aren't anything. Okay, these pages are pretty useless because this is pretty recent. This is like the last few days. But you can see down here, 2 days ago, they were buying millions and millions and millions and millions and millions and millions of dollars of Bitcoin. So, I don't know. It just makes sense to me. If the people that move the market are buying in Bitcoin, why would they make the market go down? They'll lose money. You know what I mean? So, if they want it to go up, if they know it's going to go up, then they will be buying Bitcoin, not selling Bitcoin. So, if it's going to buy, you may as well fucking, again, follow the momentum of people that actually move the market. So that's the second confluence that I go off of. Now, the rest are kind of just like technical. So first I just do a technical thing about having a 20% pullback. And it's on 23%. So basically for like an entry, I wait for a 20% pullback. And then I go into the 4-hour time frame. And then I just, wherever gives me like a 2 up candles when everything's aligned, that's when I fucking enter on the daily. But yeah, so if we entered like somewhere here, and then, so what I was talking about with like Bitcoin, when it's, you can do it risky or you can do it not. So the risky one, you can do it with a stop loss. So let's say you did something like this, stop loss like that, and then take profit like that. If you have a stop loss here, when it hits that stop loss, your $2,000 is gone. Right? That's the risky way. But if it doesn't hit your stop loss, and it starts to go up, and it hits your take profit, whatever you invest in this long-term investment, you're going to make 4.8 times. Depends what your stop loss is. It might be more, it might be less. But let's say you made 5 times. If you put $2,000, you make 10 grand. But that's having a stop loss. That's a more risky way, but it's a more effective way. If you buy $2,000 of Bitcoin, not in the trade, just buying $2,000 worth of Bitcoin, right? You only got to make whatever the percentage gain is. So if you risk $2,000, you're only going to make 30% of that because that's a 30% move. So you'll only make $600 if you risk $2,000. So you can either make $10,000, but it's more risky, or you can make just $600, but it's less risky. The thing about investing, you need money to make money when it comes to investing, because there's no point in me getting something on a compound interest or any of that shit, just holding it in the bank. You can't if you have fuck all money anyways. But like, you just, like, it just takes money. Like, how are you going to invest $100 if you make a 30% gain on that $100 every year? Because that's what the S&P 500, right? If you make a 30% gain on that of $100, that's only $30 a year. But if you have $1 million and you make 30%, that's $300,000 a year, you know? So in investing, you need the money to make money. So once you got that down and you got your confluences and everything's aligned, then you can take the entry off of that. But if we do enter, I still say that we need to do it the safe way. Because in the safe way, that $2,000 isn't just going to go to zero like that. It's gonna fucking, it needs a massive like crash in the market for that $2,000 to go the fucking zero. It needs to be like, oh, let me see. Oh shit. Oh, it can't even do that. It literally can't do that. That's in minus Bitcoin, and it's never gonna go there. So yeah, you can't lose the $2,000. It can only get a little bit weaker as it slowly goes down. So that's why it's a safe option. Because Bitcoin, at the end of the day, it's always gonna go up. Because Bitcoin is just it's a new way to pay with shit. You know, once cash is gone, we're gonna have Bitcoin. You know, and you can hear those theories of like the Bitcoin's the new age. I mean, they already have fucking Bitcoin machines that you can buy Bitcoin off just like that. So, yeah. You understand what I mean?
Yeah.
The base of it. I'm just doing the opposite of what majority of people are thinking, and then make sure the people that move the market, you're on the same boat as them. It makes sense. You know what I mean? It makes sense. If you go back and you research the other times that it came down, it did the exact same thing. Let me show you. Where was it? This message up. I think it was this one here. When was that? April. Yeah. So, in April, we did a 30%. Oh, it's even more than that. We did nearly a 32% fucking move. Yeah, nearly a 32% fucking move. That's a huge move, right? And this is the low. It's the 8th of April, the 7th of April. If I go here and I go here, and we check where was that extreme fear. What's April? January, February, April. It's yeah. So right here, it went in the extreme fear on the 3rd. January, February. Is it January, February, April?
Yeah.
So it's the 3rd.
No.
Oh fuck.
January, February, March.
Oh shit, that's right. Fuck. I dropped out of school, bro.
Oh, Richard.
Yeah. Anyways,
Yeah.
here it went in extreme fear. That's on March, yeah. And then again, it went in extreme fear on April, right there. What is that? April the 7th, right there. And it went a little bit lower on April the 10th, but it was an extreme fear. If you look back, right here is when it was an extreme fear last. And look what happened after that. Huge gain. My mentor took this trade. Massive gain. You know what I mean? And look how similar these look. From this gain that my mentor took, and this gain as well. They look fucking super similar, you know what I mean? So, that's my thoughts on it. Yeah. That's good. Bro, this is like the easiest way to invest. You don't have to overcomplicate shit. All you need is just a couple things to line up to make you fucking get into the trade. That's all it is. No, but it's good. You can also do it similar to this kind of on futures, on stocks as well. But look, Nasdaq's just always going higher. Look at this shit. This is the daily time frame. This is Nasdaq. It just keeps going up and up and up and up and up. Bitcoin, daily time frame. Just keeps going up and up and up and up. QQQ is another one to look at. QQQ is the top 100 tech companies.
Talk?
Yeah, you're allowed to talk.
It's alive.
Yeah.